All right, so we have been looking at the accounting equation. We have been reviewing some transactions and the effects they have on the accounting equation. So what I want to do with you today is go over a number of transactions and review with you how to plug them into the accounting equation in Microsoft Excel, review with you how to use the formulas in Excel and how to apply the borders and all that stuff. So we're going to do one problem together and then you're going to do one problem on your own. So transaction A, opened a business bank account with a deposit of $40,000 in exchange for capital stock. Okay, so we know that we are putting $40,000 into the business and we are increasing our capital stock by $40,000. I have set these up to automatically put the commas in for you with the accounting format, so there's no need to do anything except type the numbers. Purchase supplies on account, $2,200. Okay, so we know that we're getting $2,200 worth of supplies. And if we're purchasing them on account, there is no cash changing hands, so we know that it's an accounts payable. All right, so we have two transactions, so we can go ahead and update our balance. Now, we don't have a whole lot to update here. So what we're going to do is anywhere there is a number to update, on the cell right above it, we're going to apply a bottom border. So right here is our border icon. I already have mine set to bottom border, but if you do not, hit the down arrow to open up the drop-down menu and then select bottom border. I'm going to apply a bottom border here, and I'm going to apply one here, and one here. All right, so now when I update the balances, I can very easily just type in 40,000 here because I know that transaction A had a $40,000 increase. Transaction B, nothing happened to cash, so it's the balance in cash would be 40,000. But instead of that, I want you to use the cell reference. So remember what that means is instead of typing 40,000 in, we tell Microsoft Excel to look at cell B4, that's the cell that contains the number, and copy that into cell B6. Okay, so we're going to say equals 40,000. And then supplies equals 2,200. Accounts payable, we're going to do the same thing, equals 2,200. And then capital stock, same thing, equals, and reference the cell. So that balance row was pretty easy to do. We were just copying some numbers down. Okay? Okay, transaction C says received cash from fees earned for managing rental property in the amount of $6,000. So you'll notice that I have fees earned bolded for you. Okay, so that should give you a big hint as to one of the categories or one of the accounts that's going to be affected. And cash, because we are receiving cash. Remember, the first question we always ask ourselves is cash changing hands. If cash is changing hands, then you know that that's going to create a change in the cash account. Okay, so we're going to increase cash by $6,000, and then we're also going to go on over and increase fees earned by $6,000. Okay, so now we need to update our balances. So same thing, putting your borders under every cell that a balance is going to appear. This blue box is because I have it open out on the internet. That's why it looks like that. Okay, so to update this balance, it's going to be 40,000 plus 6,000. Again, we should always use sums or cell references whenever possible. So we're going to hit the auto sum button here. Make sure that we're adding the previous balance to the new transaction and press enter. And then for all of these, we are going to do our cell referencing, so equals the previous balance because nothing happened in the current transaction. All right, transaction D, paid rent on office equipment, on office and equipment for the month, $2,700. This one was kind of interesting how they wrote it in this book. That's why I highlighted this paid rent, so you know that it's a rental expense, okay? And we are paying cash, so cash is changing hands. So for this one, when we plug this in, we're going to plug it in as a negative 2,700 because the amount of cash in the account is going down. So we want to add whenever possible. So if we put it in as a negative, we can then just add to get the new updated balance. So negative 2,700. And then we're going to come over here to rental expense. And you're also going to put rental expense in as a negative, because when you look at what expenses do to the stockholders' equity, it actually decreases. It decreases the stockholders' equity because we had to pay that bill out. So you're going to put that in as a negative as well. Okay, and then we're going to go ahead and do our borders. Now here's a shortcut for you. You can select one cell, press Control, and then select all the other cells that you want to apply the bottom border to, and then click the bottom border. All right, so here to update, we can, again, use an auto sum. We're always going to add as much as possible. And we're going to add the previous 46,000 and a negative 2,700, which is essentially subtracting 2,700 from 46,000. And we get an updated balance of 43,300. And then we're going to cell reference for all of the remaining balances that are appearing in this row. Now, if you wanted to check to make sure that your equation is in balance, that the left side, the assets, equals the liability plus stockholders' equity, what you can actually do is highlight all the balances that you have here on the asset side. And if you look down in the bottom corner here, right by my picture where I am, you'll see it says 45,500. So if we come over here and we do the same thing, selecting everything on the right side of the equation, you'll see 45,500. That is another reason why we put this in as a negative, okay, because it is being subtracted out of the right side of the equation. Transaction E, paid creditors on account $1,000. Okay, so we know that this is cash changing hands and it's a decrease to our creditors, to our cash. So we're going to do negative 1,000. And we know that we're bringing down this account's payable balance, so we're subtracting out 1,000. That's $1,000 less we owe. Okay, so again, we're going to hold Control to select all the cells that need the bottom border. And again, we will add, right? So we add the 43,300 and the negative 1,000 to bring our new cash total to 42,300. And then we're going to cell reference supplies. We will add accounts payable. So we're adding 2,200 plus a negative 1,000. So we're subtracting really. We add to subtract 1,200. And then we will reference cells whenever possible. Okay, transaction F. Billed customers for fees earned for managing rental property $5,000. Okay, so there is no cash changing hands here. All right, we are billing our customers, which means they owe us the money later. So for that, if you recall, that's an accounts receivable, and we're going to plug that in right here for $5,000. And then we know it's a fees earned, so we can come on over to fees earned, $5,000. So remember, fees is another word for revenue. You're also going to hear the word sales used as a word for revenue. All right, so we're going to apply our borders. And then we're going to cell reference wherever possible. So nothing's happening to cash, accounts receivable, supplies. Over here, we're going to be adding up our increase in fees earned and then rent expense. Now, if you wanted to check again to make sure that we're in balance, we can select these cells and we'll see that we have an updated balance of 49,500. And then coming over here, 49,500. So they do match, okay? All right, transaction G, paid automobile expenses for month 600 and miscellaneous expenses 300. So for this transaction, there's going to be 3 accounts affected. for a total of $900. It's going to be $600 plus $300. So we're paying out $900 in cash. So the cash is going to go down by $900. And then we're going to come over here and we're going to go to our auto expense. And we see that auto expense is a minus $600 and miscellaneous expense is a minus $300. Now you might be thinking, well, you're putting it in as negative, but really the amount that we paid in expenses has gone up. That is correct. We're not thinking in terms of debits and credits right now. We're thinking in terms of the accounting equation and remembering that any expenses is money coming out of stockholders' equity. Okay? All right, so again, let's do our borders. I'm actually going to pause this video and update these totals and come right back to you. Okay, so you see that I updated all the balances for this after transaction G. Transaction 8, paid office salaries for $1,900. Okay, again, a decrease in cash, so negative $1,900. And then we're going to come over here and we have a salaries expense of $1,900. I will pause and I will update, and you can do the same. Let me just come back for 1 second. It's a negative $1,900 over here in salaries expense. Okay, now I will pause and update. Okay, transaction I, determined that the cost of supplies on hand was $1,300. Therefore, the cost of supplies used was $900. So remember, at the end of each cycle, we need to update the amount of supplies used. And we started off with $2,200, and we used up $900, leaving us with $1,300 on hand. Okay, so what we're going to do is we're going to do a decrease in supplies by $900. And then we're also going to do a decrease in supplies expense by $900. And then you can update your totals. We'll be right back. Okay, I've updated the totals after the cost of supplies was calculated in. And again, if you look at the supplies account, you see now that we have a balance there of $1,300. Okay. And the last transaction is paid dividends, $1,800. So this is cash coming out of your pocket. It's cash coming out of the company. So we're minusing $1,800. And then dividends. This is also going to be a minus because dividends have a negative impact on the stockholders' equity. All right, and then you will go through and put all your borders and put your totals at the bottom. I'm not actually going to do that. I'll check to make sure that you did that correctly when I check your work. Okay, so now that we did problem 11A together, you're going to pop on over to 11B. And I would like you to complete the transactions down here the same way we just did in 11A. Okay, just note in letter D, transaction D, I talk about earned sales commissions. And again, I gave a hint that sales commissions means revenues. Okay, again, sales, revenues, fees earned, those are all examples of money coming into a company. Okay, again, if it is having a negative impact on the accounting equation, please enter it as a negative number. Because remember, we're going to add whenever possible. Don't forget your rulings, and I am going to be looking to make sure that you're using cell references and the proper formulas.